Hey, what's going on, Ben here, and today we're going to be looking at a daily time frame strategy, in particular on stocks. And so you are definitely welcome to trade on Forex, um, on futures, on ETFs, and stuff like that. But in particular, we're going to be looking at stocks on the daily time frame. We're not going to be going down all the way down into the minutes or anything like that. We're going to be focused on the higher time frames, bigger moves, and this will be good if you're trying to play some weekly options or stuff like that, or you could just, if you want to just grab some shares on the stock, and it's perfect for either of those. And of course, there's several different other option strategy. This is just really what we're doing is we're focusing on candlestick patterns, and we're focused on when to get in, and then however you want to trade it, you go ahead and trade it. So here we go. So let's go ahead and get started. And before we start, this strategy is going to be located on our website, and so I'm going to put that in the description below, and you're welcome to read that. And it was to be all laid out, and you can read that. And at the very end, if you want to leave us a comment, go ahead. That we would actually appreciate that. So let's go ahead and get started. So this is a reversal strategy, and so I got a little back tested here on the Amazon chart. This is just for our example's sake. And so here we go. So here is, we had a nice little up move right here. Nice little big up move. And then we just kind of stalled out. This is a red trend line right there. We did a little break of the trend line. And we started to see some red candles here. Tried to push back up here a little bit. And then another red candle. And then boom, a hard gap down. So it was a really strong candle. And it actually gapped down. And so now we are, so it actually went all the way down here this day, all the way down to 166, and then it closed all the way up here at 173. So man, that was actually a pretty big move this day. And so, but this is the candle in particular that we're looking at. And so, basically, what you need to be looking for is we want to see, obviously, continuation, then we want to see a pullback. So now this could happen, there are several different things, and actually I can even pull this. Let me pull this up and let me show you, because we actually had a nice little list here. Let me show you all the things that could lead to a downward move. And so there could be a recession, there could be a market correction, a negative earnings. We got interest rates, geopolitical tensions, corporate scandals, changes in regulations, all this good stuff. Well, actually, not really good, not good for the stock. So there's 18 here. There's probably 1,800 that could actually be, but these are the main ones. And so yeah, so that is all the stuff that could lead to downward moves. And so I don't know if there was news. The volume seemed pretty. It wasn't anything like insane here. There was a nice little volume right here on this candle. Actually, earnings. So this was before earnings. So that makes sense. And so there was an earnings play right here a couple days. And so this was on the 25th. And so there was earnings. So that does happen. So that was one of those earnings, definitely. And so yeah. And so that's where we got this candle. So again, so let's reiterate here. So we got a strong move up. And we want to see a downward move, at least five, more than five candles. Something like this, where it's just this down move, that's not really something that we're particularly looking for. We want a little more drop. It's going to be obvious when you're looking on the daily chart. You're going to see obvious, right? Obvious moves down, down. So you're going to see something like that. And so this particular strategy, and again, this isn't going to happen every single time. So you're going to have to look for it. But when it does happen is, say we're in a downward trend like we are right now. The markets are all kind of flushing out. This happens everywhere. So if there's ever a time to find trades with this strategy, now is the time. But this is actually a trade all the way back in April. But anyway, so here is this is our candle. So what we want to see is this strong green body. And then we simply want to see a big wick like this. Now it could be all the way down here, or it could just be right here. We just want to see it come down and just touch something. Now, usually it hits a level. There's probably a level right here that it hit somewhere back in the chart. But usually it will happen something like that. And then we end up, and we can even bump down into the lower time frames, but we just need to stay on the daily here. Let's make it simple, stay on the daily. It closed here, closed green. And so again, we want to see and we call this, and there's particular, we could call it the hammer. We call it the daily green giant, right? So the daily green giant candle, and why would we call it that is because it is a giant candle and it sticks out like a sore thumb. So that is why we call it that. When you see a giant, it's like, oh wow, it's pretty obvious on the chart, right? You look at all these, if you look at every single one of these candles, which one would stand out to you the most? I would probably say either this one or this one. Those are pretty large candles, and so that's kind of it sticks out. You can actually see it, and so anyway, so now since we have a big, so we had step one, we have a strong down move. And then two, we had a big, it's just this day, it really wanted to go down, but the market says, no, we're not going to go down. We're actually going to try to reverse. And so that is where so it ended up closing right here. And so that is what happened. And so now we are going to be smart about this. And we're going to say, okay, if so the very next day, if it comes all the way down here, or it opens down here and it continues down, we aren't interested in anything. But if it breaks this high right here, and so there's not too much, but when it opens on the next day, we will get in a trade. So let's go ahead and start that. So boom, here we go. So we actually got a couple candles here to look at, but this is the next candle. And so we opened right here, and so we actually filled that gap. And so this very right at the start of this is easy, right? The next day, so pretty much what you can do when you could look for this strategy is from pretty much after the markets are closed. So after the markets closed, you see you have a list of, you could just do the top 20 stocks. You can do the Amazons, the Apples, bigger stocks. You could try it on penny. I would recommend stick with the ones with big volume, stuff like that. But anyway, so you identified it. Very next day, you say, okay, it's on my watch list. We open right here, so this is where you would enter, and so your entry is right here, and that is actually not you can't really see that, but essentially, let me draw it right here. So this would be your entry. So that is where you would go for a buy trade. So either options, buy some stock, whatever you want to do. And so now what our plan here is that we want to do a one-to-one. So here's an entry, and then where we're going to put our stop loss, you see this wick right here, we're going to do right below it, and we're going to do, you can do 1-to-1, you could do 2-to-1. This in particular, 1-to-1, if it wins, if it wins more than it loses at 1-to-1, you're golden, right? And so you're in pretty good shape. So I would say 1-to-1. 2-to-1 is better, obviously. It's better. Basically 2-to-1 would be somewhere up here. But in this example, we're going to keep it simple. We're just going to go 1-to-1. So here we go. So let's go ahead, and there we go. And so this is where, so how many candles is that? So that's how many days? 1, 2, 3, 4, 5, 6, 7, 8. So there we go. So 8. Let's see, we entered on Friday. So 8 trading days, 8 candles essentially. And you're out. So 1-to-1, nice little win. And a little 6% move, and so a lot of you would be very, very happy with that. So that's basically it. Again, this was earnings play here, so it very well could have went the other way. Sometimes earning is a little bit risky, but again, we saw this big. It was primed up. It was ready for something. Somebody knew something, and sometimes this happens right before earnings where they'll flush it out to get be able to go back up after earnings if it's good. And so different things like that happen all the time. So if you could just go ahead and just do this. You can run the chart. You could do it all the time. Again, here's a red candle. This is actually an interesting one. Um, I like looking for the green ones, honestly, and so that's why we call it Big Green Giant. But this was a nice little. You saw the wick here, and again, you could very well trade that. But I like particular just because I know that it was ended on a good note, right? And we're ready to get bullish. This one was more like we're not really sure. But yeah, you could just go back in time, and I did want to go. In particular, at the time of this video, I did want to go to, and so yeah, we had another earnings play here. So yeah, obviously another earnings call here. So we did have, and so boom, very strong move. And again, we are in a we're in a market right now that is just not really sure. So this is a little more risky. But again, we saw that pattern over and over. And so this would have been the entry right here. So here, let's go ahead and actually put this on. So 1, 2, 1 right there. So there's our trade right there, and actually it's active. So we saw here that it did. We did go above it, and honestly, now since I'm looking at it, we did not open above it. Um, like this one back here in our example. Wherever that example was. Yeah, you saw here how we did open above that. And so again, we can be nitpicky all we want. But I mean, I particularly would actually be nice to see it open above this wick. And so if we do that tomorrow even, and we can even have it up here. And so again, this is our candle. And so say we get an open right here. But we'll see. This markets are a little bit crazy right now. I don't know. Again, there's a lot of recession talk. There's a lot of are we just is this a little pullback? I'm not really sure, um, but yeah. Again, you just trust the pattern, right? If it doesn't work, it doesn't work, right? And so we can go all the way back. This could be one right here. Here's a nice little one. Um, this is a nice little one right here. It's not again, it's not that big strong move like a lot like. And again, this is just one stock in particular. Um, but yeah, I mean, we could go all the way back here and try to find these bottoms just to kind of see what these bottom candles look like. This was a really interesting one. So you saw this big down move, really nice strong down move, and yeah, we had a really nice big green giant right here. But again, it opened down and then it just went sideways. And I would say also, if we want to get a little more technical here, if it does something like this, right, these candles here, if we get anywhere below this candle, we're done with ever identifying what, with this candle. But since it did break above that on this one, that actually would have been a great entry. I don't know if you saw that right there, but yeah, that's a nice little break above that. And we could try, I'm not interested in, we could do both buying and selling something like this. But that I really just wanted to focus, especially right now. We want to focus on finding trades on these big down moves. And so again, yeah, like I said, there's this one right here. Again, I think probably let's just go ahead and wait till it opens above that candle, and then we get our entry. And so right now we might kind of go sideways. And again, if this price goes below this, then we'll actually not be interested in that. But yeah, so that's the strategy. That's pretty much the strategy. So if you guys are interested in that, there's so many other. I mean, I could look at other. We actually have another example, and let me actually show you that right now. And it is Apple. And so Apple actually, so we are right here. And so yeah, we actually have a pending trade in particular with Apple. So we're not above this yet, but if it does, we're in. And so right here, so if it goes above that, we're in. If it goes below this, we're out. And so it's very simple, and you can try this on lower time frames. There was a strategy that actually I was testing, and it kind of gave me an idea with this. it's on the open of the 5-minute candle. But this is bigger. This is bigger chart. These are bigger prices. These are bigger moves, very big moves. And so this does. And before I go, I would hate to not mention it. We do have. Um, Okay, we do have this a software that signals green bars, red bars, and what it does, it essentially, so if we get a reversal on the SP 500, right, and we start to get an alert, it'll actually give you a signal, and it'll actually boom, it'll go to the upside, and then if SP comes back down, boom, it'll give you a signal to the downside. It is a great signal service, and actually here's an example of it working in real time here. And so this was our alert that we got right here. This was alert to buy. And then what did we do? Actually came down a little bit more, and boom, it hit our target. And so it does that all the time. And so yeah, so this is kind of it in action where it does an entry and then take profits, and then obviously there's a nice little trade that we did with it, and then boom, there's our third take profit. And so if that sounds like something you're interested in, I will also put this link in the description as well. All right, guys, that is it for me, and I definitely appreciate you. If you enjoyed this video, go ahead and leave a thumbs up and leave a comment. We would appreciate that as well.